Hey, I'm Ann-Riley Caldwell, not your ordinary agent. I'm here today with
Matt.Wilson with the Wilson Mortgage Team.
That's right, and one of the things that we are talking about is interest rate buy downs. We're currently kind of in the fall of 2022, and that's a hot topic right now because people are using them unlike probably any other time, don't you think?
It's been a minute. There wasn't any reason to buy down a 2% rate.
That's right. So it's been more than a minute. So one of the tricks that people are doing with interest rates going up is they're actually buying down their rates. So what does that actually kind of mean?
So in the general sense, buying down your interest rate means that you pay a little bit more up front so that you pay a little bit less over time. And you do that in the form of discount points. A discount point is 1% of your loan amount. Not your purchase price, just the financed amount. And it varies from day to day depending on how pricing is as to how much that equates to. But generally you're talking 1% extra up front, maybe around 1/4 to 1/2% on any given day, lower on the actual interest rate.
So one of the things that we've seen is sellers like to keep their price points higher, their purchase price higher, so that for appraisal purposes, you know, the whole neighborhood is happy when that happens. And so one of the ways that sellers are helping buyers at this point in time is contributing when they can to that interest rate buy down, correct?
Absolutely. One of the things that I've seen on my end is that we don't really have a housing problem where houses are necessarily overpriced. It's more so an issue just of affordability on the payment front. And the cool thing is, you know, interest rates between January and today are a good 3.5% higher. However, you can have the seller now, because the market has cooled down just a little bit and sellers are more willing to play ball, you can maybe have the seller help buy down that interest rate and get you a payment a lot closer to the spring this year.
Yeah, absolutely. Because at the end of the day, people focus on interest rates, but they should really focus on.
You got to look at the overall strategy. If you focus solely on interest rate, you could buy $40,000 in points to get a really fancy interest rate that you could brag at the neighborhood barbecue about. But what you're not going to tell them is that you spent the price of a new car to get there, and when you refinance it, you lost all that money anyway.
Yeah, so I mean, there's a lot going on right now with interest rate buy downs. So reach out to Matt and he can walk you through it in more detail. He can look at your personal situation and see whether or not it makes sense for you to do an interest rate buy down or not. Also, you know, what the seller can and can't potentially contribute to that. And then on the real estate side, you know, I can explain it, especially if you're selling a home. It's a great option if it is needed instead of reducing your purchase price. And there's advantages to that we can talk about more. And obviously if you're buying and you can get the seller to contribute some money, in some instances it's better that they pay upfront closing costs. Sometimes it might be better for them to contribute to a rate buy down. I mean, those are all situations that are unique to each person that Matt needs to walk you through.
Absolutely. Mortgages are not one size fits all at all. So, you know, what may work best for one family's big picture financial goals may be a horrible idea for the next family. So it's very important just to have that conversation with a real local human being because there's a lot of things that Google can't teach you.
That's right.